Hey, this is René. In the last video I showed you how I made over 15,000 euro of live trading profits in gold using my range breakout expert advisor. In this video I want to talk about the same expert advisor but in a different chart. So I also use this expert advisor in many other charts, for example the USD Japanese yen. In the same time period where the gold market generated 15,000 euro of profit, in USD Japanese yen I only made 1,500 euro in profit. So you can also see the graph here, and it was even a long sideways period before in the last few months there were some profits made. So you might ask yourself, why am I still trading this strategy in USD Japanese yen if it is less effective, so to say, than it is in gold? And yeah, in this video I want to show you what exact settings I use in USD Japanese yen, and also in the end of this video I want to show you how the long-term backtest looked like for the last 10 years with these exact settings. So this might help you to understand why I still use this strategy now.
This video is presented by BM Trading. Learn to code your own expert advisors. Link in the description.
So here in my MetaTrader 5, you can see I prepared already the strategy tester with the range breakout EA. The name for my EA is a little bit different, but it's the same program that you can also find on my website and in my MQL5 seller profile. By the way, you can use this program and many other programs completely for free with my partner brokers. Check out the link in the description. So let's move over to the input section here in the strategy tester. And let's quickly go through this. So the basic settings here are pretty similar to what I use for gold. I use a little bit less risk here because I use multiple currencies or currency pairs where I trade the range breakout EA, such as USD Japanese yen, GBP US dollar, and also Euro US dollar. So I decided to lower the risk for all of them a little bit because they of course correlate in some way. And yeah, so I use 250 euro every single trade, but the risk of course can be modified here. I do not use any buffer above or below the range, and I do not use a TP. The stop loss here is 1% of the position open price, and I use the range from 3 to 430. In a second we will also see this in the visual mode. Then in the evening at 6 p.m. trades will be closed, and I don't use any trailing stops, and there's only a maximum of 1 trade per day. Then also in my account I apply a range filter, so if the range is smaller than 0.2% or 0.4% or bigger than 0.4% of the current price, I do not trade, and this filters out quite a few trades. So here in the strategy tester you can see I will now simulate this for the current year 2025 just to show you again in the visual mode how this actually looks. So yeah, if I fast forward just a little bit, we can see here we do see a range here, but we can see the range was not traded. This is probably a rounded value because normally it should trade with 0.2%. I think it was slightly below this and we skipped this range. So let's just move to another day where we see a valid range. Here again on this day the range was just too small, so you can see this range filter is really filtering out a lot of the ranges. And yeah, so far it was a good idea I think to not trade these ranges because it's a lot of up and down. But here we can see now the range is in this range filter, so it's above 0.2% and below 0.4%, and we see a trade. In this case it was a sell trade. So how does this work? I told you already I used the range from 3 to 430 in the morning. So every single day the program, the expert advisor, creates this range and it finds the highest and the lowest point in this range. Then we will place a sell stop order at the lower end of the range and a buy stop order at the upper side or end of the range at the end of the range. And then we simply wait until one order is executed. In the exact same moment the other order is deleted. The order or every trade with my personal settings has a stop loss of 1%. The calculation is based on the position open price, and I risk a total of 250 euro for every single trade. So if I now fast forward, you can see what I told you already. At 6 p.m. or 18 o'clock, the trade will then be closed, and that is actually it. There is no fancy trade management whatsoever. It's a really simple and so far kind of effective strategy. And I use this for many years in my live accounts or in different accounts, also in FTMO projects, and many projects, also with different settings, by the way. So I do not claim to have the best settings in this account, for example. I personally also use different settings in different accounts. And that's pretty much what the program does every single day. So in a second, we now have a look at the long-term backtest, but before we do this, I want to show you here in the test one more range before the orders are executed. So you can see again from 3 to 4:30 we create the range. Then at the end of the range, we can see it down here at 4:30 we place these two orders, one at the upper side, one at the lower side of the range. Both have a stop loss of 1% based on the position open price or the order price. And then, basically we just wait for the first order to become executed. And in this very moment, the other order, as you can see here, is then removed. And that is basically it. Then we just wait for the end of the day. And if I fast forward, we can figure out if this will be a winner or a loser. In this case, this seems to be a more or less break even, but it's a small loss. So far we generated a small win and a small loss, but that's not what this is about, because this is about repeating the same process every single day over a long period of time. Because if we just have a look at one specific day, in my opinion, that's just pure luck. But if we have a look at a lot of trades, let's say 100 or 1000 or even more trades, then we can talk about a more systematic approach. So this is exactly what I want to do. Now that we learned how this works in general, I will change the custom testing period to 2015 up until now pretty much, which is May 2025. You can see I use the range breakout EA in USD Japanese yen with my custom data from the Quant Data Manager, and the inputs stay as I just explained them before. Now I turn off the visual mode so we can have a quick and fast backtest over this period of time. And once this is finished, we will draw a little conclusion here. Okay, so here we go. We can now see the long-term backtest result of roughly the last 10 years. And on the first view, this looks kind of good. And this is also obviously the reason why I still stick to this strategy and why I still want to trade this strategy also in the future. Because so far we have not seen any problem. The EA is in profit, which is great. But even if it would be down like 1 or 2K, it would not be the biggest problem. Because as we can see here also in the past, there were very long periods, actually like probably even years or longer, with drawdown periods or sideways periods. And from my experience in many strategies, this is a completely normal behavior. In comparison to gold, of course, this performance in the last year was worse. But also, if we remember from the gold video, the last video that I uploaded, there were also long sideways or negative periods. So I think gold was just in a lucky period in the last year, and USD Japanese yen was more in a sideways period in the last year. But this doesn't mean that it cannot be profitable or even more profitable again in the future. And what for me is a actually more important measurement or test that I do is I usually like to compare the performance in the strategy tester with the performance in the live account for the same period. So here, for example, we can see that in my live account I traded from the end of March 2024. So if I now find this same time here, we should go somewhere here, I guess. We can see end of March it's roughly here. End of March 2024, we can see in the strategy test, the strategy test I think was even slightly negative, which means that I kind of outperformed the test a little bit. And this is for me always a very good sign, because what I don't want to see is that my strategy performs a lot worse in the live account than it does in the tester. Here it's also like my guess why the strategy test is a little bit worse is because I'm using the high quality data from the Dukascopy data feed, and this gives me a very good or a very long tick data period for testing, but also the Dukascopy data usually has a higher spread than I have with my broker, which is IC Trading. So my broker has a little bit better trading conditions, and therefore my results are a little bit better than the ones in the test. But overall, if we just compare the shape of the graph or balance curve, or however you want to call it, we can see this is actually very, very similar. So we start with this dip, we have a recovery, it's hard to speak. Then we have a very long sideways period, but always these ups and downs that we see in the test, they kind of also show up in the live account. And then we have the move that went up a little bit, sideways period, and then a little bit or some losses in the last few days, but it's in general very, very similar, and this is what I want to see, and this is also the reason why I still stick to this strategy, and I'm in good hope that it can still be a good addition in my portfolio of strategies. Also, for everyone who also wants to use my strategies, let me repeat myself here, you can use these expert advisors for free with my partner brokers. Check out the link in the video description if you're interested. I think it's a great offer where everyone benefits, so make sure to check it out if you are interested. And yeah, that's it for this video. I hope you liked the insight, and I hope I was able to explain a little bit what my thoughts are when I trade these strategies and when I compare them like to the testing results. That's it, I'm out, and I will see you in the next video. Have a great time. Bye.